If you've been watching Palantir stock, you've probably noticed it's sending some, well, seriously mixed signals. Is it about to take off, or is it getting ready for a nosedive? Right now, the technical data is locked in a massive tug of war, and today we're going to break down exactly what that means. So that's the big question, isn't it? When you look at the charts for Palantir, is this a clear-cut buy that's just catching its breath, or is it a hidden trap, quietly flashing warning signs that it's about to drop? The problem is, the technicals are pointing in both directions at once, creating a real standoff in the market. So, to get to the bottom of this, here's our game plan. First, we'll look at the conflicting signals themselves. Then, we'll dive into the strong case for a bull run, and follow that up with the equally compelling case for a pullback. We'll see what it looks like to be stuck in the middle, and finally, we'll map out 3 possible futures based on all this data. All right, let's get into it. And right off the bat, I want to be clear, the technical picture for Palantir is a total puzzle right now. It is not a simple story of strength or weakness. It's a messy mix of both, which honestly is what makes it so interesting to dig into. And here's our first peek at that conflict. The overall technical score is 52.94, so just barely leaning bullish. But then you look at the ADX, which measures how strong a trend is, and it's super weak at 1596. So what does that tell us? It says that whatever direction the stock is trying to go, there's just no real conviction behind it. This is our first big clue that this tug of war is very real. Okay, so first, let's grab one side of the rope. Let's explore the bullish argument. All the signs that are pulling the stock up. And the bull case kicks off with a really compelling number, a risk/reward ratio of 3.28. In simple terms, that's a fantastic ratio. It suggests that, from where the stock is right now, the potential for gains is more than 3 times higher than the potential for losses. Now that's a number that gets optimistic investors to sit up and pay attention. And there's definitely more fuel for that bullish fire. Indicators that track volume suggest that big money, the institutional investors, might be quietly accumulating shares. They're buying. The stock also has a low beta, which just means it's historically less jumpy than the rest of the market. You add that to the fact it's trading way up in its yearly range, and you've got a pretty solid foundation for a bullish argument. Now, here's a key piece of the bull case, and it comes from something called linear regression. Basically, this analysis plots the stock's trend over the long haul and suggests its price should be around $188. Since it's trading below that right now, the model is essentially saying it's technically undervalued. This really supports the idea that the recent dip is just a pause in a much longer-term uptrend. But of course, that is only half the story. Now we have to look at the other team in this tug of war, the bears. Let's look at the indicators that are forcefully pulling the stock in the other direction, suggesting a pullback could be right around the corner. Whoa. Okay, this number is a major red flag for the bears. 242.76%. That is how much higher the current price is than the VWAP, or the volume-weighted average price. Just think of the VWAP as the true average price paid for a share today. Being this far above it is a classic warning sign that a stock might be way overextended and due for a correction. You know, this slide right here perfectly captures the stock's big problem. Just look at the left side. The price is currently trading below all its key short-term moving averages. That screams immediate weakness. But then you look at the right. The price is still above all its long-term averages, which shows the bigger picture uptrend is, for now, still intact. This is the literal definition of a technical crossroads. And the bearish signals just keep coming. The MACD, a really popular momentum indicator, is negative, which suggests the bears are in control of the wheel right now. Volume acceleration is also negative, which means that buying pressure is starting to dry up. And to top it off, we've got a bearish cross of 2 key moving averages, the FAMA and MAMA lines, which is another one of those textbook signals that traders watch for potential trouble ahead. So with these powerful forces pulling in completely opposite directions, where does that leave the stock? Well, it leaves it stuck right in the middle. Let's take a look at the indicators that are basically just shrugging their shoulders, reflecting all this indecision. The Relative Strength Index, the RSI, is a perfect example of this. So a reading above 70 is considered overbought, and below 30 is oversold. Where's Palantir? Well, across a bunch of different time frames, it's sitting squarely in that neutral zone in the middle. This just shows that the market has no conviction either way and is basically just waiting around. And it's not just the RSI. Other key indicators like stochastics and momentum are also just confused. Some are pointing a little bit up, others are pointing a little bit down. The takeaway here is pretty clear. The market is in a state of equilibrium, just waiting for some kind of catalyst to finally pick a direction. Okay, so given this complete standoff, where could the stock possibly go from here? The analysis actually lays out three very distinct paths forward, and each one has its own probability. Now, based on the weight of all the technical evidence we've looked at, the bearish scenario, a pullback, currently has a slight edge at 40% probability. But look how close this is. The bullish case is right on its heels at 35%, and the neutral, just go sideways scenario, is at 25%. This isn't a forecast, it's just a reflection of how tight this battle is. It is anybody's game. And this brings us to the most practical part, the actual trigger levels to watch. These are the lines in the sand. For the bulls to really take control, the stock needs to break decisively above 181.45. For the bears to win this fight, it needs to fall below 171.66. If it stayed anywhere in between those two numbers, we just stay in this neutral holding pattern. These are the battlegrounds. You know, this quote from the source material really just wraps it all up perfectly. It's a mixed picture. There are good, valid reasons to be optimistic, and there are good, valid reasons to be cautious. Ultimately, it all boils down to those key price levels to tell us which side is finally gaining the upper hand. So, after digging through all this data, we're left with this incredibly clear image of a technical tug-of-war. You've got the bulls pulling with all their might on one side, the bears digging in their heels on the other, and the stock price is just stuck, dead in the middle. The data shows a complete standoff, leaving us with one final, crucial question. Which side is going to run out of rope first?